Hi all and welcome to another edition of our weekly market outlook report for the week starting Monday the 17th of August. We have a busy week ahead of us, which starts with slow economic calendar on Monday. On Tuesday we should be on the lookout for RBA meeting minutes and Japanese trade balance figures. Going forward, UK, Eurozone and Canada consumer price index figures, in addition to the FOMC minutes, is closely watched on Wednesday. On Thursday, the main point of interest is reserved for US jobless claims data, and the week will finish on Friday with UK retail sales and UK, Eurozone and US manufacturing and services PMI data. Now, let's take a look at few markets. This is euro dollar in 4-hourly time frame. Therefore intraday we can see that price action is coiling, therefore sideways consolidation pattern in something that potentially looks bullish if we see a breakout above these two current swing highs at 1.1890, potentially opening the way for the move higher towards 1950, 1.20, possibly even 1.2066 on the upside. Alternatively, if the price consolidates at this level and we see a gradual move lower towards these cluster of the lows at 1.17, then this can possibly morph into a multiple top or maybe shoulder, head and shoulder with an extension to the downside and retest of additional supports past 1.17 towards 1.1650, 1.16, 1.1585. Cable appears to be very similar. Sterling dollar, we are seeing nice and bullish reaction, higher US dollar weakness, but lately we are seeing this sideways consolidation, therefore coiling price action here, energy build up, which normally precedes an explosive reaction in some way. Key trading level to the upside is at 1.3160, so spike through that level and an end of day close of that level, retest of above as a newly found support would be perceived to be quite bullish, targeting 1.32, 1.3280, 1.3250 on the upside. Alternatively, if we see a gradual move lower and the loss, an end of day close below 1.30, that would be perceived to be quite bearish, potentially opening the way for the retest of additional downside supports towards 1.2950, 1.29, 1.2860. Dollar Japanese yen, we saw this massive oversold bounce. The current price is supported by 20, 50 and 200 period moving averages and also this rising support trend line at the key trading level at 106.45. As long as that level holds and bulls return, push the price higher through this current swing highs at 107, and end of day close above that level and retest of that level from above as a newly found support would open the way for a gradual move higher and retest of additional resistances at 107.50, 108, 108.20. Alternatively, if we see a dip lower and the end of day close below 106.45, a retest of that level from underneath, that would open the way for a deeper corrective move to the downside, targeting 106, 105.90, possibly even 105.30 to the downside. Gold had massive corrective move, and this appears to be an oversold bounce back from 1840, 1850 area, which happens to be rising trend line in a daily. It happens to be a moving average and also happens to be a fib retracement in different time frame as well. And the price action potentially is creating a rising wedge. They have a tendency to break to the downside, so a loss of the key trading level towards 1930 would be perceived to be quite bearish, potentially opening the way for a deeper corrective move towards 1900, possibly even these lows down here towards 1885, 1860, 1850 to the downside. Alternatively, if we see a push higher and an end of day close above 1966, 1967, and the retest of that level from above, that would negate the existence of this rising wedge, and this would become a V-shaped recovery, potentially targeting additional resistance towards 2000, 2020, 2045, 2050, possibly even 2074. Lastly, let's talk about crude oil. Crude oil is gradually moving higher. Key trading level for crude oil is at 41.70, 41.50. It's actually a zone of about 20 points. Bulls are in complete control above that level, so pullbacks to that level and a rally or a gradual move higher and a breakout above this current swing high at 43.70 would be perceived to be quite bullish, opening the way for a spike higher targeting 44, 44.50, 45, 45.60 on the upside. Alternatively, if you see a dip lower and an end of day close below 41.50, that would open the way for a corrective move lower towards 40.50. Loss of that level could target 40, even 39.80 to the downside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.